Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to do our daily technical analysis update of commodities. We'll take a look and I'll give you my financial opinion. Again, if you guys need any help with anything, check out the finding-value.com. Check out the website. You can use the word discount and the coupon code for the platinum membership. The silver membership will be phased out of existence, so please don't sign up for that. So we're going to walk through. We're going to get through the dollar yields, work through precious metals and commodities and ETFs that I follow. And obviously, this is all my opinion, and we'll dive right in here. So we're going to start with the dollar, the DXY, the relative strength indicator. And we're getting a lot of buying pressure here these past 3 trading sessions. Massive move in the dollar. We've also seen a massive move in yields to the upside. So look at that big move there. I think that, well, people are saying it's from the low unemployment numbers that are out. And since I should say job openings and low unemployment, all of that stuff kind of tied together, the market, at least this is the narrative around it, the market thinks that the market could sustain higher interest rates. So interest rates are rocketing higher, and the dollar's coming up with it. And just like I said, the DXY, the relative strength of currencies, is tied to the relative monetary tightness of that particular currency. So if the Japanese has stronger monetary tightening than America, then the dollar goes down in relationship to the Japanese yen and so forth. So this is just a relative strength. They could all be free falling to zero, but some of these currencies could be gaining strength against others as they do their free falls. But this is the Batman pattern. It is heading lower in the bigger, longer term view. But in the short term, we've got lots of buying pressure for the DXY. Yields vastly higher, up 2.89%. You can see these past 3 trading sessions, pretty good moves in yields. And keep in mind, this is a gap up as well. Is this going to break this pattern here to the upside and break out? I don't know. We'll find out here shortly over the next few weeks where this thing's going to go in terms of yields. Yields going higher is a headwind for the overall stock markets and growth stocks. Not so much for a lot of these commodities, but when you take a big picture view here, this just looks like one big kind of stair-stepping pattern that we get that is coming up, and this is kind of a flag pattern where we could continue higher in yields. Generally, higher yields is a function of real negative rates, people unwilling to buy bonds, put it that way. And a real negative rate means that your inflation rate is higher than what the yield is paying on the bond. And people sell bonds, increasing the yield for those bonds when they sell them. So this has implications on how assets are priced, especially movements that are very fast. Fast movements generally will put selling pressure or a headwind against the overall stock market in anything that is a high growth stock. So bond prices, this is prices heading lower today, down 0.75%, and then the 30-year yield slightly higher. The short-term rates tend to move at greater paces than the long-term rates. So we've got a lot larger move on the 10-year versus the 30-year yield. And this is the 30-year divided by the 10-year heading lower. You can see these past 3 days, the yield curve is inverting more than what it has in the past. So when this falls down, the curve is inverting. And that's what we've seen all the way since 2020 of August and onward. Notice it's August of 2020. That's also when precious metals peaked, was in August of 2020 as we head lower. And what I said here is, generally speaking, when you're really low down here, that's good for precious metals because it could potentially move on higher. But it doesn't mean that this is done inverting. We could still invert more if there is, we'll say, problems in the system related to energy. And there might be. And there might be more inflation around the world. That's going to put energy into a supply deficit because it's just a function of how much money is in the system in relationship to how much physical oil there is. We've got the CRB index just moving sideways, 0.01%. It's this little guy right there. We're right at support for the most part. I mean, we've got a longer-term support line is the blue line that goes all the way back here. That's a big long-term support area. And we're just consolidating around that support area. We have another trend line support coming through here right below it. The CRB to S&P 500 basically flat today, down. I mean, it's down minus 0.27%, pretty flattish. And I do think that we are getting close to a bottom at some point here for that ratio, where we're going to find some support. There's a lot of support in the general vicinity of where we are at. So I bet you we'll find some support sometime soon. Gold slightly higher. But again, we've got a lot of momentum from the previous two trading sessions where this could still head lower or go sideways with that momentum of selling pressure there. Silver, also slightly lower today. Again, we've got a lot of downside selling pressure from those past 2 days. I think it's going to base out. We're probably going to come to support right at about, I don't know, let me pull this guy over here. 2150-ish level, somewhere in that range is probably where we're going to find some good support. And then platinum, yeah, it's slightly higher today, but again, we've got lots of selling pressure from last trading session. What this is an inverted bloody nose where we could see more selling pressure in the future, which I hope we get. I do want to see this head lower where I can buy more physical platinum. I love me the platinum, just put it that way. XAU to gold ratio, that's also selling off. We've kind of squeezing up a little bit in this pattern. It's kind of a channel pattern. We did break to the downside. There we are. It's not really a bearish setup, though, although we did break. Maybe we come up and do a retest and then go back down a little bit. But that's what we're seeing there. GDX slightly lower, still above support. That blue support line is this guy going across. Obviously, we've got some contacts all through here. And through here. So it's a valid support line, pretty strong, and we're right on top of it. SILJ also down a little bit. There we are. We're below that resistance line. We have fallen back below it, and we are heading lower. The momentum does look like it could potentially continue in the short term. Crude oil had a wild day today. It was all over the place, but we did end up, this could be a bottoming pattern. It's a hammer pattern. That could be used as a reversal candlestick. If you look at it from a short-term time perspective, you can see the selling pressure right through here, and then we basically regained our footing here throughout the day, and it's starting to head back up higher. We are still below that trend line in the short term, and we got to break through that trend line there that's right above us. Natural gas actually ending up higher today, up 3.24%. We still need to put in a bottom down here. I'm not convinced that it's bottomed yet. I think we're very cheap. I think we're very low. Completely agree with that. But I do think that we're still in the process of bottoming. XOP, a little bit more selling pressure today, down about 2%, even though crude oil and natural gas were up today. So we are seeing some weakness, and we'll say the sustained selling pressure in natural gas is being felt by some of the equities today. So we are seeing a little bit of weakness in the exploration production companies. And then looking at the energy service companies, we're seeing some strength. Although we were up today in crude oil and natural gas, they were basically sideways. I still like energy services. It's probably my favorite sector at the moment. And I think there's going to be some crazy things that happen in this sector. We do have a shoulder, head, shoulder, inverted head and shoulders that's ready to break to the upside. But you can also see an inverted head and shoulders in a lot of the oil and natural gas exploration companies as well. So it is across the board. Looking at the Sprott Physical Uranium Trust, slightly higher today at 0.91%. We still have the ugly trading session from Friday. And again, we are making higher lows as we're coming up through here. Wherever we go, maybe we come back here, maybe we go a little bit lower. I don't know where it goes. I'm not the genie in the bottle, guys. But we want to break above the 1818. We want to get up above that, get up there and stay up there, get like a weekly or monthly close up there. And I think we're going to be sailing to higher highs. Lots of volatility in the short term. You're going to have to put on your big boy pants or big girl pants. This is kind of the overall trend line here if you guys want to see the bigger overall trend line. And what we're doing is we're squeezing up into this corner here for uranium. We're squeezing on up. URNM, a little bit of selling pressure, down 1.8% in the short term. We do have a little wick at the bottom, not a real big one. The lead-in pattern that I usually look for does look something like this, and then it usually comes back down to roughly the bottom there, and then we move on up. That is that lead-in pattern. Hopefully that's what it is. And you know, we broke out. We had a nice little good-looking run here, bullish engulfing and everything, and then we had these three ugly candlesticks that showed up. But yeah, I think we're close. And if you look to the left here, if I were to put in another trend line, this is a resistance support line. We're at that resistance support line, basically right where we're at today. I'm just skimming the tops and bottoms of all these little guys in here, and we're right on top of it. So, you know, I like it here. I think it looks good. If we start to see some buying pressure move us to the upside, I'll be a major bull, especially if the candlesticks are big, if the big green army comes back. TAN, Invesco Solar. So we're still playing around with this trend line here, and we got to break through it. It looks really good from the candlesticks before it. We've got large green candlesticks. The red candlesticks are getting a little bit smaller. And then I think we'll eventually break to the upside. There's what it looks like. You can see the lows are starting to come on up into it. So that looks very good. We don't have a lot of selling pressure over here. I do think it's going to break and move on higher. And, you know, some people say, oh, you've been saying for a couple of months that this looks good. You guys, you have to get your time frames right. It takes a couple of years for these things to develop and play out. This is from 2021, this peak. And it's been consolidating. You can see that this bottom's starting to round and come on up. You need to get your time frames in years, not in months or weeks. People, you know, a lot of these not traders, but investors, we don't look at things in terms of weeks or months. We look at things in terms of years. And the big move, this is just squeezing up into some corner here that's going to get a big move eventually. So that's my take on that. COPX. A little bit of a selling pressure day today. Let's go to the dailies. A little bit of selling pressure the past 3 days. We'll see if this returns, you know, where this thing returns to. I'm guessing it's probably going to go down maybe to $35, $36 if the momentum can carry us there. Again, we've had a massive move here. So it's pretty normal to have a consolidation after that. Lithium also selling off a little bit. Not really any reversal candlesticks or anything here. It's just a down day. REMX, so the rare earth metals. Another down day today. So we peaked our head above this trend line right here. We sold off. We had a nice setup going. This is a bullish engulf and everything's going good. In these past 3 days with that, we'll say that jobs report, it's just, we'll just say, that report came out and interest rates are just shooting higher. So that's really what's holding this all down. SPX, again, that the headwinds with the interest rates and dollar heading higher. Yeah, it's a little bit of a headwind and we've come on back, but it's actually holding up very well in the face of all that. Let me get some of this stuff out of here. But it's holding up incredibly well for how much of a headwind we've got with the dollar and yields. So I would say that this is actually bullish for our S&P 500 and the NASDAQ as well. It's really not selling off. It's not like the sellers are taking it to the woodshed and just selling everything. So I think it's pretty robust. EEM with that stronger dollar. I'm seeing these patterns all over the place where you kind of go like this, you come up, you come back. You usually come back to this little starting point, about $38, and then we'll, I think, head on higher. So we are in a pullback right now. XHB is also pulling back. We had a monster run from here. That's from $60 to $72, which is a monster run for some of these bigger ETFs. MOO, still above support, still looking all right. Copper slightly lower. It is slowing down. The opening and closing price is coming together. So again, I'm just kind of looking at this. Looks like we've got some sort of pattern here. We've broken that, and we're coming back maybe for a little bit of a retest. Lumber, selling off a little bit today. Again, you break out, then you usually get a pullback, and then we roll on higher. So things look good still on a long-term perspective. We've got iron ore up 1%. The chart is wrong. I don't know why it's not updating. Nickel still moving on up 1.44%. Still looks fantastic from this double bottom. Aluminum up or down 2.13%. So down a little bit. And the aluminum companies weren't down too bad. And I do think eventually this is going to work its way higher. We are still in front of that larger deficit. Inventories are low. And eventually this will, I think, work its way higher. Baltic Dry Index down a little bit. We are still moving lower. I don't see a bottom yet. Obviously, the cost or the pricing of a lot of these different commodities is having an impact on the Baltic Dry Index. Baltic Dry Index is cheap as heck. It is so cheap. This is one that I'm definitely looking at for potential investment opportunities. Newcastle Coal also coming on back with natural gas. So that is heading lower. And that looks like it may continue. And then looking at Ethereum and Bitcoin, these both look pretty positive to move to the upside for, I consider these liquidity measures. But it's just moving sideways at this time. But overall, guys, doesn't look too bad, at least in my perspective. I know some things are down, but we're still on top of patterns. We're still on top of support for the most part of everything. Oil and natural gas, oil is looking a little bit better. Again, I'd like to see stronger moves, get out of that pattern and break that trend line, start moving on higher. I'm fine if we drift sideways. Give me longer buying opportunities. I'm cool with that. And, I'm enjoying the ride. I am. I'm enjoying the ride. I do think that the most of the opportunities are in energy service companies right now. Uranium, if we can get some buying pressure back, I think that could go at any second too. We are sitting on top of patterns. We've broken out of patterns. We've come on back on a lot of the individual companies. So they do look very good. Energy service companies look great. Uranium companies look good. I would say the weakest of the group is anything that holds natural gas. It's probably the weakest because it's had a pretty good pullback in natural gas. And it's going to weigh on the natural gas producers if the price stays down here. And they're going to have to roll over hedges and all sorts of other things. Natural gas companies. So if the natural gas price stays down, obviously it's going to weigh on some of those natural gas companies. They haven't really fallen too bad. They've held up pretty well. I know a lot of their old hedges are rolling off, which were bad anyway. They were probably at the same price as they are today on some of those hedges. So those are all rolling off, those losses, but now we've got lower natural gas prices. So it's kind of a wash, so to speak, in some of the companies when you look at it. All right, guys, if you like the content, give me a thumbs up, subscribe to the channel, and we'll catch you next time. This is Finding Value.